What happens if Apple doesn't go above 150? Well, I keep the $5 a share. Even if Apple goes above 150 and I have to sell my shares, I still keep the $5 a share. What it allows me to do is increase my returns and at the same time reduce my risk. Hey guys, Omar Khan here from Theta Trading. First of all, thank you guys for joining us. Hopefully we teach you some cool stuff about the world of options and investing. But we'd love for you guys to subscribe, like, and hit the bell icon so you get notifications as to when our next videos are coming out. All right, guys. So we are going to talk about today of the concept of a covered call. What exactly is a covered call? What does that mean, covered call? I'm sure some of you guys have heard this. Now, here at Theta, we prefer to use options to invest. So we trade, but we trade to invest, okay? Now, a covered call is something that you use when you want to sell a stock, okay? So I'm going to describe the two different ways of selling stocks. All right, let's talk about the traditional way of selling a stock, okay? I'm going to go back to an example I use often of Apple, okay? Apple, let's say it was trading at 120 bucks, okay? Now, Apple's at 120 bucks and it goes to 130, 140, 150. I have a couple ways of looking at this, okay? I could say, well, hey, I've made a good amount of money. I can sell my shares, okay? And that's what most people do. They're like, okay, well, I made a lot of money. I'm going to sell my shares. But I'm going to go back to even before that. The biggest problem that most investors make is they don't know why they bought any shares in any company. They haven't done any homework. For the most part, most people are just guessing and hoping because their buddy or their neighbor or some guy somewhere said, buy this stock. They have no idea what the hell they're doing or why they're even doing it. That's really not a good place to be because when the markets, correct and pull back, when they give up ground, if you don't have that conviction and belief in that company that you're investing in, as stock price goes down, instead of getting more opportunistic and putting more money into it, you're going to get scared and panic and sell off at a loss. And that's even worse when you have, like I said, you have companies that you don't know or invest or believe in that can wreak havoc with the mind. Now, so let's go back to that Apple example. We've done our homework on Apple. We bought it at 120. And let's say a year goes by and now it's at 150. Well, we say, okay, wow, we made $30 a share. Pretty good return. Let's go ahead and sell our Apple shares. Okay, great. We're going to sell our Apple stock and we're going to realize a $30 per share gain. That is the traditional way of selling a stock, okay? But one should know what they're selling it for. Like in your mind, when you look at a stock, if you've done your homework on the stock, you have an idea as to what that stock will be worth over a period of time. Not exactly. Nobody in the world knows exactly what that stock or you have a ballpark. You're like, you know what? I think this company's going to do a lot better because I see so many people using their products. One of the companies I've invested in recently, and a lot of people here at Theta have, is Tesla. And, going back to the anecdotal evidence of investing, why did I invest in Tesla? Well, I see a lot of people driving them around everywhere. I can see that the world is changing. It's moving from gas to electric. And then what I do from there is I simply talk to Tesla owners. I'm like, hey, why'd you buy this car? Do you like it? Are you ever going to go back to a regular internal combustion car? I've never heard one person say yes so far. I went to the local dealership here in Oakville, Ontario, Canada, and I bought a Tesla. Now, I've never owned a Tesla. I've always owned giant gas-guzzling V8s for a long time, and I love them. But the world is changing, and I have to change with it, right? So that gives me a fundamental belief on how good I think this company is. And I'm happy to buy more if it goes down in price. And that's the difference between thoroughly believing and understanding a company. So let's translate that to Apple. Now, let's say, for example, I've done my homework on Apple. I believe in the company. I see a bunch of people using, and I ask, younger generation. I ask the older generation, hey, do you use Apple? Do you use Android? What's your next phone going to be? This is a great way to invest. And now when you do that sort of stuff and you look at their financial statements, you have a good idea as to where this company may be in the future, okay? So let's get back to how do we sell a stock? How do we get out of our position? So Apple has gone from $120 to now $150 a share. And we're like, well, damn, I'm happy. All right. But if we've done our fundamental homework and we believe it's worth more than $150 a share, we should say, we'll keep this. But let's say for the sake of argument, we believe it's worth $150 a share. And we're like, you know what? We want to sell this at $150. Okay, so what do we do here? Well, what we do here is simple. We simply sell our shares of Apple, and we realize a profit of $30 a share. Now, a covered call is using an option to sell your shares and being paid for it, okay? So let's look at scenario A. Bought Apple at 120. Year goes by, it's worth 150. We say, you know what? Happy, made a good profit. Sell it off. Okay. That's one way of doing it. What we prefer to do here at Theta is we prefer to sell covered calls when we want to sell a stock, okay? So instead of selling the stock, we will sell a covered call instead. Now, a covered call is essentially what I'm saying is when I sell or write a covered call, those two words are synonymous. They mean the same thing. Let's go back to that same example. Apple's at $150 a share, and I say to myself, hey, I want to sell my Apple shares now. Okay, so what I'm going to do, instead of selling those shares for $150, I'm going to write or sell a covered call, which means I'm going to agree to sell my shares for $150, but let's say someone pays us $5 a share for like a month and a half. Would you take that deal, or would you rather just sell them for $150? Okay, now if Apple doesn't go and stay above $150, I keep that $5 a share. Even if it goes above $150, I still keep the $5 a share. So it allows me to increase my returns and collect these things called premiums. To me, that's a no-brainer decision. I'd rather take the extra $5 a share. Why? It's a substantial return, right? It's like 3.5% for the period of 45 days. What happens if Apple doesn't go above $150? Well, I keep the $5 a share. Even if Apple goes above $150 and I have to sell my shares, I still keep the $5 a share. What it allows me to do is increase my returns and at the same time reduce my risk, okay? So that, again, is the difference between selling a stock the traditional way, or the other side of the coin is agreeing to sell your stock for a certain price and being compensated for it. Ask yourself which side of the table you'd like to be on. Would you just want to sell your shares, or do you want to get paid? Do you want to get paid to sell your shares for a certain price? Your choice. Here at Theta, we prefer to get paid not only to buy our shares at a discount, but we also prefer to sell our shares for a profit and get paid for that as well, okay? And that's a lot of the difference between, you know, sophisticated investing or smart money and dumb money. I'm not necessarily saying, I'm not saying that we're necessarily the smartest money around. What we're saying is that the best investors in the world use sophisticated, techniques and tools like options to enhance their returns. Now, Warren Buffett also is one of the biggest sellers in the world of options. Here at Theta, we also sell options. Why? Because when you sell an option, either a call or a put, you collect a certain amount of money simply for either agreeing to buy a stock, and when you write a put, or when you agree to sell a stock, writing a covered call. You can make a lot of money simply not for buying or selling, but simply for agreeing to buy or sell. Now, if you guys want to learn more about what this is and what this means and how does it work and what the fuck is this guy even talking about, have a listen to our free 1-hour webinar and then determine whether this is right for you or not. My personal opinion is that once you figure out how to use options in your investment strategy, and I mean you thoroughly understand the use of options on high quality stocks, you're never going to go back to the old way of investing. I encourage you guys to look it up. A lot of our students here, or alumni here at Theta, have now started their own YouTube channels. They've recently learned, and now they're teaching others. So just take a look at what you think of the concept, and then see if this makes sense for you. Now, for me, it has changed my life. I'll get into that a little later on in another video, and how I grew up and how I got to this point, and in terms of being financially independent and learning how to use options and real estate to create a good amount of wealth for myself and my family. But the real difference is this, guys. It's simply knowledge. The investors who do the best are the ones with the knowledge, and the ones who do not the best are the ones who don't know what they're doing, right? And that is what we're trying to enhance. We are trying to enhance the concept of financial literacy. So just going back to that scenario of a covered call, ask yourself a simple question. Do you want to sell your shares, or do you want to get paid to sell your shares? You pick which side of the coin you're on. To me, I want to get paid to sell my shares. I want to get paid to even buy my shares at a discount. So anyways, guys, I hope I've explained to you guys what the concept of a covered call is and why we prefer to sell a covered call when we want to exit a stock, as opposed to simply selling the stock straight out. We prefer to sell a covered call. Well, anyways, guys, if you can comment in the section below, in the comments below, exactly what you'd like to hear in the future. This whole world of options is kind of new to everyone, and you know, now that a lot of traders are coming on board and people are starting to manage their own money, managing your own money is really cool, but you have to know what you're doing, right? If you don't know what you're doing, don't do it. Then you're just guessing, and guessing is a shit strategy. Hoping is a shit strategy. It's not what you want to be on, the place you want to be in, excuse me. Anyways, guys, thanks for watching the video. Really appreciate your support. Please comment below on anything you'd like to see in the future, and we will see you here soon. Thanks again. Take care.